The capital market always in the Middle East come under attack, that it is not doing its role and it has not contributed as much as the capital market has contributed in the West. You have been there from the beginning. Do you agree to this or you disagree?
No, I think it's not the problem of the capital markets. I think it's a problem that fewer companies have tapped the market. I think if you look at many of the largest companies that exist today in Egypt and in the Middle East, they have been quite successful at tapping the equity market and the debt markets. It's a problem that fewer companies have tapped the market. I think if you look at many of the largest companies that exist today in Egypt and in the Middle East, they have been quite successful at tapping the equity market and the debt markets. So it's not the problem of the capital markets per se, it's the problem of people who have not understood enough the importance of the capital markets and how the capital markets can help them develop. And some of it is cultural. If somebody makes a study of the people, of the companies that have been able to tap the capital markets versus the ones that have not tapped the capital markets, I think you will see a substantial discrepancy in their growth rates and in how they fared over the following years. The capital market as a conduit for growth and for job creation is the key metric as far as I'm concerned.
There is a difference in terms of evolution of markets and what essentially catalyzes capital activities in the different countries. The situation in Egypt is very different from the situation in many countries in the GCC, for example. Right? So in Egypt, you have many entrepreneurs that need access to capital to grow and or potentially looking at exiting profitably or diluting some of their equity ownerships. In the Gulf, the situation is slightly different in that you still have very large privately owned family groups that really don't necessarily see the appeal of capital markets at this stage of their evolution. The businesses are cash rich. In many ways, they're over-equitized, so there is really very little need for external capital. The growth in the region has provided sufficient cash flow to fund the investments. And so why look beyond? That's going to change, I believe. The growth of certain categories, certain sectors, like our sector, for example, the retail sector is a good example of that. And the ability then of the groups to compete as conglomerates or potentially looking at specializing and spinning off their specialty businesses. I think that will come. I think there's tremendous amount of liquidity with the structures that exist today, with the regulatory structures that exist today. There's probably excess liquidity looking to invest, probably a dearth of opportunities, and as a result, tremendous secondary trading that goes on. I mean, that's a sign of latent demand for investment product.
The capital market has a very strong and important role, is to make listed companies more healthy. And what I mean by more healthy is that when companies are listed in the stock market, they are subject to many parameters from the stock exchange, like governance issues, about the disclosure issues, about investor protections. So I mean that it is not only you are targeting the capital market for imminent need for access to finance, but also if you would like to have sustainability in the way you are doing business, if you would like to make sure that family companies or family business will continue over time, you need to get listed and to be subject to the rules and the regulations of the stock market. So I do not like to just say that the capital market or the stock exchange is playing a very important role in terms of access to finance, but also to make companies healthier than they are not being not listed in the stock market.
More and more of the stock exchanges for example, in Malaysia have got now an ESG index Sharia compliant, which what Dr. Imran talked about, that it helps the companies to corporatize, institutionalize, and become better. So the trend is to have local capital back local businesses, to the extent local businesses are ready to take capital. Capital will always go, whether it is financing or equity, to places where it feels comfortable. And regulators are also encouraging banks to do more and more local financing. And therefore, there is a prioritization. So the local UAE bank will first prefer UAE credits, then GCC credits, then MENA credits, but then would also go to rated markets. So the trend is greatly now to invest into regional markets, but it really depends on how fast governments open up. And in opening up, how fast the PFI framework, the Public Finance Initiative, public-private partnership initiatives are being created. How much connectivity and line of sight can we have to the real economy? The more we do that, the more you will find capital is coming in. There is a lot of capital available in the local markets.
I've always maintained that the problem in our part of the world is not the capital. I think that our problem is, I think there are a lot of investment opportunities. I think there is a lot of capital. The problem is you don't have enough intermediation capacity, people, and entrepreneurs who can take this capital and develop it into something on the ground.
In 2014, 1/3 of the listed companies in the Egyptian exchange went for a capital increases, 10.1 billion Egyptian pound. And now recently, in 2015, as you might understand, we are expecting 3 to 4 to 5 big IPO in the market. You are talking about a huge number of IPOs will come to the market in 2015. If I believe that the capital market could understand what is going to happen in the economy, you would get the message that investors are more confident about the growth potential in Egypt, about the investment opportunity coming in 2015 and 2016 if we are having the right economic policies in place. So this is why I'm still saying that we are much better off compared with 2013 and 2012.